Welcome back to the Daily Crypto Deep Dive. Michael Saylor was supposed to be in trouble. That was the story just a few weeks ago. Strategy stock had been bleeding for months. The premium to its Bitcoin holdings had collapsed. Critics were asking whether the whole Bitcoin treasury machine had finally started to break. Some investors were saying the easy money had already been made. Others were warning that spot Bitcoin ETFs had made strategy less special, because if investors wanted Bitcoin exposure, they could now just buy the ETF instead of buying a volatile stock with debt, dilution, preferred shares, and a huge personality attached to it. And then April happened. Strategy stock jumped around 33% in 1 month. Bitcoin recovered back toward the high $70,000 range. STRC, Strategy's preferred stock product, kept its dividend at 11.5%. And suddenly the question completely changed. A month ago, people were asking whether Michael Saylor's Bitcoin machine was running out of fuel. Now they are asking whether Wall Street wrote him off too early. Before we continue, this episode is brought to you by Kraken. If you are buying Bitcoin, Ethereum, Solana, XRP, or building your long-term crypto portfolio, Kraken is one of the most trusted names in the industry. Use the Kraken link in the description to sign up, support the show, and get yourself set up on a serious crypto platform. Only invest what you can afford to lose. Always do your own research, and never chase a move just because a stock or coin has already ripped higher. So today, we are looking at why strategy stock has risen, what people were saying before the move, what changed in the space of a month, and why this company is still one of the most fascinating, dangerous, and misunderstood trades in the entire Bitcoin market. Because strategy is not really a normal stock anymore. It used to be MicroStrategy, a business intelligence software company, but that version of the company is no longer the main story. The main story is Bitcoin. Michael Saylor transformed the company into the most famous corporate Bitcoin treasury vehicle in the world. Strategy now trades less like a software business and more like a leveraged Bitcoin machine plugged directly into Wall Street's capital markets. That is what makes it so entertaining. This is not just a company buying Bitcoin. This is a company using shares, debt, preferred stock, investor psychology, market premiums, and Bitcoin volatility to try to build an empire around one idea: that Bitcoin is the best long-term treasury asset on Earth. And when the market believes that idea, strategy can look like genius. But when the market starts doubting it, the whole thing can look terrifying. Before this latest rebound, the bear case was getting louder. Critics were saying strategy's model depended on one very important thing: the stock trading at a premium to the Bitcoin it holds. In simple terms, if strategy is worth much more in the stock market than the value of its Bitcoin pile, then the company can raise money by selling shares, use that money to buy more Bitcoin, and potentially increase the amount of Bitcoin backing each share over time. That is the flywheel. The stock premium creates the fuel. The company sells stock or raises capital. It buys more Bitcoin. Bitcoin rises. Investors get excited. The premium expands. Then strategy can raise more capital again. That is the bullish machine. But the fear was that the machine had started to slow down. When Bitcoin weakened, strategy stock fell harder. When confidence dropped, the premium compressed. When the premium compressed, the capital-raising story became less attractive. And when strategy started trading closer to the value of its Bitcoin holdings, critics started saying the magic was fading. That was the real fear. It was not that Michael Saylor had lost faith in Bitcoin. He clearly had not. It was that Wall Street might have lost faith in the financial structure built around Bitcoin. And that is a very different problem, because Saylor can believe in Bitcoin forever. He can go on every podcast, every TV interview, and every conference stage saying Bitcoin is digital energy, digital property, and the greatest asset in human history. But if the market stops giving strategy a premium valuation, the machine gets harder to run. That is why April mattered so much. Bitcoin bounced. Strategy bounced harder. And that changed the mood almost instantly. When Bitcoin recovered towards $78,000, strategy became exciting again because MSTR is not a simple one-for-one Bitcoin tracker. It moves with Bitcoin, but it can also move beyond Bitcoin because investors treat it like a high beta version of the asset. If Bitcoin is the engine, strategy is the turbocharger. That is brilliant when Bitcoin is rising. It is brutal when Bitcoin is falling. That is why the stock can go from being hated to being chased in a very short window. A month ago, the questions were negative. Is strategy too risky? Has the premium collapsed? Are ETFs stealing demand? Is dilution becoming a problem? Are investors getting tired of the Saylor trade? Is this just a leveraged Bitcoin stock that works on the way up and punishes people on the way down? Now the tone is different. Now the question is, did the market panic too early? Because a 33% monthly gain is not just a bounce. It is a signal that investors still see strategy as one of the most powerful ways to express a bullish Bitcoin view through the stock market. If you believe Bitcoin is heading much higher, strategy gives you more drama, more volatility, more upside, and more risk than simply holding Bitcoin itself. And that is exactly why some people love it. They do not buy strategy because they want calm exposure. They buy strategy because they want torque. They want Bitcoin exposure with a Wall Street wrapper, a corporate balance sheet, a famous founder, and a structure that can move violently when sentiment turns. The other piece of the story is STRC. Strategy keeping the STRC dividend at 11.5% matters because it suggests the preferred stock structure has not spiraled into panic. For normal listeners, the easiest way to think about STRC is this. Strategy is not just buying Bitcoin with ordinary shares anymore. It is building a more complex capital stack around Bitcoin. Preferred shares, dividends, financing tools, market pricing, and investor demand all become part of the strategy. That might sound dry, but it is actually one of the most important parts of the story. Because Saylor is not just trying to be the biggest Bitcoin holder. He is trying to turn strategy into a Bitcoin-backed financial machine. That is what makes this so different from simply saying, company buys Bitcoin. Anyone can buy Bitcoin. Strategy is trying to build products around Bitcoin. It is trying to access different pools of capital. It is trying to attract investors who may not want to hold Bitcoin directly, but might want a yield product, a stock market product, or a corporate security connected to Bitcoin's long-term upside. That is why Wall Street cares. If strategy can keep these products stable, raise money efficiently, and continue adding Bitcoin, the bull case becomes stronger. But if Bitcoin falls, the preferred products wobble, the premium compresses, or investors start questioning the structure, the bear case comes back quickly. So the comeback is real, but the risk has not disappeared. That is the key line for this episode. Strategy's rebound does not prove the bears were wrong forever. It proves the bears underestimated how fast sentiment can flip when Bitcoin turns higher. Because in the strategy story, sentiment is everything. When Bitcoin is falling, strategy looks over-leveraged, complicated, and dangerous. When Bitcoin is rising, strategy looks visionary, aggressive, and ahead of Wall Street. Same company, same founder, same Bitcoin thesis, totally different market mood. And that is why this story is so powerful. Michael Saylor has become one of the most polarizing figures in finance because he forces people to take a side. To the bulls, he is the man who saw the future before corporate America did. He took a boring software company and turned it into the most important Bitcoin treasury company in the world. He understood that cash was being debased, Bitcoin was scarce, and balance sheets needed a new reserve asset. To the bears, he is the man who turned a public company into a giant leveraged Bitcoin bet. They see danger in the debt. They see danger in the premium. They see danger in the dilution. They see danger in investors treating a volatile stock like a clean Bitcoin proxy. And the truth is, both sides understand part of the story. The bulls are right that strategy has created something Wall Street cannot ignore. The company has made Bitcoin a corporate treasury conversation. It has turned Bitcoin accumulation into a capital markets strategy. It has proved that a public company can become almost entirely defined by its digital asset holdings and still command massive investor attention. But the bears are also right that strategy is not risk-free. It is not the same as holding Bitcoin in cold storage. It is not the same as buying a spot Bitcoin ETF. It is a corporate structure built around Bitcoin, and corporate structures come with moving parts. That is what listeners need to understand. When you buy Bitcoin, you are mainly betting on Bitcoin. When you buy strategy, you are betting on Bitcoin, Michael Saylor, the company's financing model, the market premium, investor appetite, the capital structure, and the idea that strategy can continue turning volatility into opportunity. That is much more complex. And that is why the stock can be so explosive. In April, the market started leaning bullish again. Bitcoin recovered. The fear eased. The preferred dividend remained stable. Strategy posted its first positive monthly performance in 9 months. Suddenly, what looked like a broken machine started looking like a machine restarting. That gives us the central question. Was this just a relief rally? Or was this the beginning of Wall Street rediscovering the Saylor trade? Because if Bitcoin breaks higher from here, strategy could become one of the biggest comeback stories in the market. The stock has already shown that it can rip when Bitcoin moves. If Bitcoin pushes through $80,000, then the conversation around MSTR could become even more intense. Traders will start looking at the premium again. Analysts will start recalculating the upside. Bulls will argue that strategy remains the best leveraged Bitcoin play in public markets. But if Bitcoin gets rejected again, the old concerns will return fast. That is the danger. A stock like strategy does not give investors a quiet ride. It gives them conviction or punishment. If Bitcoin runs, the stock can look brilliant. If Bitcoin falls, the same leverage that created upside can become the reason people panic. So where does that leave us? It leaves us with one of the best deep dive stories in crypto right now. A month ago, strategy looked vulnerable. The bears had momentum. The stock had been battered. Critics were questioning the model. The premium had compressed. Bitcoin ETFs were challenging the reason investors needed MSTR in the first place. Then Bitcoin recovered. Strategy jumped 33%, STRC held its dividend, and Michael Saylor's machine suddenly looked alive again. That is not just a stock move. That is a narrative reversal. And in crypto, narrative reversals are often where the biggest moves happen. Because markets do not just trade numbers, they trade stories. And the story around strategy has shifted from weakness back to possibility. The next test is Bitcoin itself. If Bitcoin can hold the high 70,000 range and push toward $80,000, strategy's comeback story gets stronger. If Bitcoin breaks down again, the market will quickly revisit every old concern. Dilution, debt, NAV premium, preferred dividends, and whether strategy is too dependent on bullish Bitcoin conditions. But for now, one thing is clear. Wall Street has not finished arguing about Michael Saylor. And that is exactly why strategy remains one of the most entertaining stocks in finance. It is part Bitcoin bet, part corporate experiment, part Wall Street machine, part cult stock, and part stress test for the entire idea of Bitcoin as a treasury asset. Maybe Saylor is building the future of corporate finance. Maybe he is building the most volatile Bitcoin trade on the market. Or maybe somehow he is doing both at the same time. As always, this is not financial advice. Strategy stock is risky, Bitcoin is volatile, and anything connected to leveraged Bitcoin exposure can move violently in both directions. But if you want to understand where Bitcoin is heading, you cannot ignore strategy. Because whether you love Michael Saylor or think the whole thing is too dangerous, his company has become one of the clearest windows into how Wall Street really feels about Bitcoin. And right now, after a 33% monthly surge, Wall Street is not laughing at the Bitcoin machine anymore. It is watching it very closely. Drop your thoughts in the comments. Is Michael Saylor building the smartest Bitcoin company on Wall Street? Or is strategy still one of the most dangerous leveraged trades in the market? Smash like, follow, and as always, we will see you at the top.